Yep. Welcome everyone. Make sure you guys have something to write some notes on, and I'll be going over some concepts. I'll try to make it as simple as possible, just so that everyone can follow along fairly easily. And this is normally what I do each Sunday, right? In my Patreon group, we go through, we prepare ourselves, and not just through technical analysis, but also preparing ourselves mentally, so that we're prepared for any instance that the market is going to kind of throw at us or we could experience. So I'll delete this. So if you guys have been keeping up with the threads, I have a fairly simple process that I go through just when identifying kind of setups throughout the day or each day. 1 second here, let me find it. Okay. So this was the setup that I had posted. Okay. We'll just go through the setup. So yes, you can, right, this was all in the thread, but I feel like it's a lot easier for a lot of people to be able to hear me vocalize and walk through this. Okay, so what I do each morning, I look at, first off, I'll mark NQ. I'll go through and I will set alerts. So normally my NQ has a ton of trend lines on it. Yeah, like this. So I'll go through, clear this. Futures had a nice reaction here. I will set alerts to cross above and any other kind of major key resistance levels or support levels that may be broken through. So we'll just go through a few. Nothing major. I want to see if this works. Oops. Okay, so I'll set some alerts like that. We'll go on NQ. Of course, if you're trading QQQ or anything like that, or if you're trading SPY or any of the holdings in SPY, you'd want to set alerts there. I like to draw alerts on VIX as well. VIX is not open, so I'm sure it'll gap down with everything moving up, but I want to see if it gets below 16 tomorrow. 16, probably gap down to 17. 15. This is just a kind of basic instance of what I would do. Okay, and then let's go to, I had Apple up. Okay, so what I do here, okay, we're gonna go through and chart as if, obviously, this is all that we would be presented with in pre-market prior to open. We would have the previous day high, the previous day low. I would mark this extended hours low right here, as well as the pre-market high. Now, I've talked about marking the high and the low before close. You can do that, but if the extended hours low and the pre-market high already kind of reiterate that information, then there's no need in doing so. Going through. Now, what this is going to do, it's going to provide you two channels. This channel right here is within the previous day high and the previous day low, right? This daily bar. And what this is telling me is a sense of consolidation. Okay, this is an area where price is resting and longs and shorts are just anticipating the next move. They're either accumulating in the base of this channel, or shorts are accumulating here in the top of this channel here, this pre-market high channel. So when I go through each morning, I mark any major supply zones that I may see or any major demand zones. For this instance, I'm just going to leave the ones that I have here, and we'll go through a couple more examples as well. But right, for a zone, I like to see tight consolidation prior to a large move up, or any kind of flashing bar or rejecting wicks to the bottom or top of the candle. So, and what I'll do here is I'll mark these out right. So if this pre-market high breaks, I know that there's a resistance right above it, about a 60 cent area above this pre-market high that I know that price is going to have to come through and break through. So that's the reason why I didn't mark a zone here, because this to me is just a resistance, whereas over this resistance, this is the main area where shorts are going to be protecting and harboring. So moving through, I like to select my contracts before open, of course. A lot of people don't do that. More experienced traders will, just so that they're prepared when the market does open. They don't have to sit there and scramble through their trade book, right, and select which contracts right when price is at their level where they would like to enter. So normally I like to trade the first 1 to 3 contracts that are out of the money, closest to being in the money. So if we bounce here off of this pre-market low, this 153 area, I'm most likely going to be trading anything above that $1 to $3 above this. Okay, now I know the contracts can be kind of spread out. I think this is, yeah, like $2.50 a contract, just about. So you can trade in the money as well. There's nothing wrong with that. It's a little bit less risk, and it'll keep you trading closely as possible to the underlying chart. So moving through, right? So if we were to be looking at this from a pre-market perspective, 153, so you're probably going to see, you know, maybe a 155 call or something like that, which would be the break over this. Remember, you can trade in the money or out of the money. In this case, since the options contracts are spread out every $2.50, you're probably going to just trade the closest in the money and one out of the money if you want the out of the money contract. Now, that's only if price bounces here, right? We should always be gauging how quickly price is coming towards the zone. A lot of traders, they tend to just blindly place orders here, or if price just comes into their zone, they're just randomly slapping a market buy, which is not really preferable, just due to the fact that the zones can get blown through, and we should always be reactive more so than predictive. So I go through the same concept applies for the supply zone. So if we're at 155, I'm most likely looking at trading in the money or the closest contract being out of the money. So if it's at 155, it's probably at 152.50 or something like that. But that's only if price rejects. Okay, so we're going to move through here slowly. We can see here right off of open. Okay, now if you're not quick off of open, that's fine, because in most cases, if it truly is a runner, it's going to provide you multiple opportunities to get in. Now, one thing that I've really been trying to push within the room is to not trade the chop. Okay, you either enter on a specified entry, and if you miss that entry, you wait for the next possible entry that's going to provide you a level with the lowest risk to reward. So lowest risk and most potential reward. Someone asked, how do you select contracts before market open? Price changes a lot when the market opens. Yes, price does change a lot, but it doesn't matter, because we're trading we're trading the levels on the chart. So yes, even if the contract, you know, let's say you're expecting it to trade at, you know, maybe let's just say, for example, a dollar a contract, so $100 a contract, right? And it opens up a little bit higher. Okay, are you still not going to take that trade with your proper risk management if the levels there are being respected and presented to you? For me, in any instance, whether it's small caps, large caps, mid caps, if price is being respected through these candlesticks or formations, demand zone, supply zone, support and resistance, then whenever my edge is present, I must execute so that that's what's consistent. And, you know, you can always trade further out of the money. If it's something that you're not comfortable trading, it's not going to follow the underlying as much. But once again, if your technical analysis is proper and very accurate through trial and error, really the price of the contracts doesn't matter, because if this does move up, now it can't be super far deep out of the money, but something relative to being, you know, somewhat, I don't know, I would say possible in this time frame of the day. So moving forward, right, this zone gets respected here, but we expect this pre-market high to show resistance, especially anything over it. And, you know, shorts are not really letting any buyers come into the zone right here. So we keep moving forward. But what is something that we should always be watching, okay? Now, I know that we've marked this channel here and the supply and demand zone and all of these other levels, right? But we have to keep in mind other perspectives into the market. So one indicator that I really use here quite a bit and have always used is Vwap. The basic notion of Vwap is under Vwap it is bearish, and over Vwap it is bullish, but also to pay attention how much time is spent over or under Vwap and noting the candle reactions under. So I do see a lot of upper wicks, but if we are playing from a bullish perspective, right, we do have the support that hasn't been broken through yet. Right, a lot of traders, they like to focus on where price is moving up and seeing how strong the rejection is, which is fine, but you should also watch how closely the direction that you're trading is, the support, how closely that's being defended. So even though we do get a series of lower highs here, we're getting a very strong series of higher lows. And if we notice on Vwap here, there's not a lot of time being spent under Vwap compared to the price and time being spent over Vwap. Okay, so any time that it pops under this, buyers come in very heavily here. They're stepping their bids up, as well as short stepping, you know, down on their asks, okay, their limits. Now, normally when I want to see a strong break, I would like to see a break in base, and I also want to see my indicators, my 9 and 20 EMA, as well as Vwap, try to support that move in either direction, whether it be to the downside or the upside. Okay, so moving forward here, we can see this supply zone right here. It's getting chipped through. So weak break on the pre-market high, but we're maintaining our support here. But once it breaks through, okay, we get a little 3-bar play here. This is on the 10-minute. So we get a break and a base. Now we can see the base of the supply. Everything under it is getting bought up. Okay, so we continue to move forward, and we get this is on the 10-minute. So I want to go through and go on a smaller time frame, just because I know that this is what a lot of people will trade on. The 10-minute even itself is a small time frame, but just to get the kind of full effect for what we were looking at here. Okay, we talked about a break in base. So, you know, some of you may be asking, hey, why didn't this fail through? Okay, you know, why didn't, if I took a put here, why didn't this fail through? Okay, one, you should have been waiting for the reaction. Anytime you see a strong pivot or a strong rally up and it stalls out, you want to watch the reaction, and you want to see whether or not this price is being defended, or if it's going to continue to push down. So remember, price came down and nothing closed below the support, right? We do get lower wicks here, but always gauging the price. This was a weak breakout. Okay, so a weak breakout means that buyers are still present here. It was also a 200 EMA tap. Okay, so we go through, same thing, weak breakout, but then we get a strong break. Okay, this is a bullish engulfing over this whole trend here. Okay, we see that this green candle right there takes over this whole trend. So this kind of flips the sentiment. Okay, it's kind of, you know, back and forth, 50-50, I'd say here. You know, you could really just, it's a very neutral pattern. But through VPA, noticing all the lower wicks, noticing that it's over VWAP here. Yes, we are getting a downtrend break, but how do you, the only way that you get a downtrend break is through a series of lower highs. So you can't be afraid by all of these upper wicks. Really, you know, the main factor here is watching the bottom portion of this trend, right? How strongly is this getting pushed up to maintain that bullish kind of notion? Okay, so right, what we see here, well, we see it break within the zone, the supply zone, and it bases. Okay, constant higher lows. Remember, I talked about the pivot points, the higher highs, the higher lows, the lower highs, and the lower lows. Okay, this is your micro trend. So trading on the micro trend right in this instance was good, but also this as well. But what traders get into trouble with, right, when they see big green candles, they're buying long, and then they're experiencing chop. They're going through theta decay. Their contracts are getting burned, when really, I mean, it's so simple, but from people transitioning over from small caps, they're having a hard time, you know, I mean, with the same issues. They're bringing over the same issues that they had from small caps and making them worse in large caps. Why? Because when they see these large, big rallying green candles, they go long. And then when they see these big red candles, they go short. Okay, so, I mean, who isn't, really like guilty of that, honestly, right? It pops up. Okay, you're thinking, oh, it's going to break through, right? It's going to have all the sustaining volume. In reality, we're only 15 minutes after open. It's still very early on in the day. In most cases, people are waiting 30 minutes to 1 hour before trading or placing anything, simply due to the fact that we need more data to be developed in front of us. Okay, we need to be able to reflect on more of these candles in order to make a strong thesis for a trade, for something for me to confidently put my money behind. And like I said, right, who isn't guilty of it? This past couple of weeks, I've seen myself trade through the chop, and then just went in hindsight and was like, hey, I need to just be able to patiently wait for this chop to be completed, so that I can find an area or a trend where I can easily get in and scalp this or day trade this and lock in some profit. So there's nothing wrong, right? And it's not to say, hey, whoever bought this entry down here, who's holding it all the way, right? From 9:30 all the way to 12, so almost 3 hours here, right? A lot of people are not going to hold it for that long. You may experience some theta decay, but remember, if you're close to being in the money or even the first contract out of the money, it shouldn't affect you too much. But remember, guys, always focus your micro trends here. This is what builds your macro trend, right? Your big picture, okay? But getting caught up in trading and scalping every pivot, what is that in reality, okay? I want to make, so here's the statement, okay? I want to make money on every pivot. I want to go long here, go short here, go long, go short, go long, okay? In its entirety, that's greed, okay? Most traders who make, I'd say, probably some of the most successful traders are traders who take less trades, right? Why do they take less trades? Because they only execute trades when their edge is present. So when price comes to a desirable area that they can easily replicate and consistently trade, right? That's your edge. So they're waiting for their edge to be able to be presented in order to put behind a strong amount of capital and, what is that? A low risk trade, okay? You have a higher likelihood of the trade working out rather than the trade going against you because you're just taking a boredom trade, or you're taking a trade because you feel like you need to be into a trade. So we've gone through here now, okay? We've marked all of our levels. We've seen that, hey, the base of this demand was respected. Buyers are trying to chip through the supply, and then we can see it gets broken and based, right? Buyers taking over this supply zone, and then this large reaction here. Okay, now from this perspective, what if you don't do all of that? What if you don't do any of this, okay? Right, but you're patient. You can see here, maybe you're an indicator trader. This is why it's important to, maybe if you don't trade with indicators, it's a good idea to understand why they work and how they work. Okay, I do enjoy them. I have the 200 here, the red is the 20, and the 9 is the green. Okay, so the red is 29 is green. Now, there's a lot of chop here, okay, and yes, VWAP is there, but once we break this high of day, okay, we have this high of day, there's the low of day. Once we break this high of day, what happens? Okay, it gets broken and based upon. It's riding the 9 EMA, okay, so this is a signal here. This is your bullish signal. I typically like, if we're talking about A+ setups, a high of day or low of day break and base. So we see that high of day break, base, gets scooped up here by the 9 EMA, scooped up there again, and you have a very strong breakout reaction. And then even after that, this is on the 5 minute, okay? It's all sustained here through the 9 EMA. Each time it taps up, remember, the later on into the trend, the more weakness you will see, okay? So it's respecting the 9. Later on, it comes down and respects the 20. But let's go to another instance here. Okay. Let me see. Let me go to more recent. Okay. I think this one may be good, right? So, maybe that you're not the best at trading the open, or it's a lot of work for you to be able to mark the pre-market high, low, previous day. It's not too much, but some people just, it doesn't work for them, okay? So there's the high of day, or there's the low of day. This would have been the high of day at one point, right? When it ripped up. What happens here, you get a break and a base. Okay, so this would be a later entry, right? You're not doing all of the work that would have allowed you to get into it an earlier entry here, but I'll show the other perspective as well, okay? You get a break here, and a base, and a strong continuation, okay? This is also supply zone break and base. You can see where buyers stepped in here, also on the 20 EMA, right? Trading can be very simple, but you have to be able to be patient. A lot of people want to get in on their entries right at the open. I highly recommend everyone to be a little bit patient, especially this week, where there will be some indecision in some instances, just with the meetings and, you know, with quad witching later this month and OPEC meetings, everything like that, right? So we should all be very cautious, even if things are ripping up, you know, just being able to lock in profit rather quickly and, you know, slowly but surely, you know, build these accounts. So there's an instance there, right? But what if we went through and did that preparation that we did, right? So there's the I mean, you could mark this as pre-market low, but that's pretty steep. I think that it was possibly a dark pool, but pre-market high or low, pre-market high here. You have the previous day high, which looks like it was broken and based as support. Okay, we see right here off of open, it breaks above. You have a wick here holding that. You know, you can get in much earlier. You see the difference here, right? The preparation in pre-market, selecting contracts, noting your key resistance levels in your extended hours. You see the entry right here, okay? Whereas before, this previous high of day, right? This would have been, you know, what is this? 15 minutes after open, the first pullback after open, right? You would have waited a little bit for a break and a base. And then you see this 11:25 compared to getting in at 9:40. So about a 2-hour difference almost, and much more profit being able to trail along on these EMAs. So I want to go through a few more examples. I'll catch up on the chat as well. Is this making sense to you guys? Is this, you know, if you guys have any questions, please post them. I try to get through as much as I can, but try to keep them on topic with the lesson, right? I'm not going to go through and chart tickers tonight. Oh, yeah, I drew those, I think, from the 30-minute earlier. How far back are we looking at for supply zones? What would you consider a supply zone for SPY? So, I mean, since SPY is an index, right, we'll go through. I don't really, here. Well, look, I was already charting this. All right, so this here is marked on a smaller time frame. I will clear this out. I will go on I normally go on the 1 hour. Okay, remember the 1 hour or any kind of supply and demand zone, I mark the large upper rejection wick. Okay, then I just extend that out. That would be a supply zone. Okay, moving up here, this would have been a supply zone. It looks like it got based in. You see it broke, came down. Buyer stepped in there, scooping up on the 9 EMA, big push up. Now for demand here, okay, you would have marked, you know, you could have marked this, okay, but that's when you have to zoom in. Okay, let's look at the 30-minute. Okay, there it gives you a zone. That's a pretty broad zone, I'd say. I like my zones to be a little bit thinner. So we go through in the 15-minute. We zoom in a little bit more. Okay, we can see here, we can tighten it up just a little bit. Right there. Okay, now how did that help us out? Remember, we just marked these zones out. Okay, large upper wick here, large bottoming wick, major supply on the daily, or on the hourly, but you know, it would have been from the daily. Look at how this gets respected each time, okay? Bounce right there, long bullish rally, okay? You know, this is always focus where price is going to bounce rather than, hey, where price is going to go, right? If you focus on the risk reward aspect and the health of the trend, right, the health of price action, how it's maintaining these zones, you'll fare much better than traders who are just buying to look to see, hey, where is this going to rip to? And what happens here again today, right? right there, demand tap, 200 EMA bounce, nice little move there, comes back down, demand is respected. Okay, you see the respect here, it pops up on open. This is because of the CPI numbers, comes down. What are we looking for if price is ripping down? A lot of people were like, oh, maybe it's just going to be a super short bearish day, the CPI numbers didn't matter, maybe it's going to blow through, right? You have the 200 EMA here, you have previous day low down here, and you have this major demand zone that's been respected for the last few days. Okay, you guys just saw me find the zone from the 1 hour, move down to the 30 and the 15 to tweak it a little bit, to tighten it. What happens here? Okay, remember, respected 1, 2, and now possibly the third day. Look how strongly buyers come in. Yes, price action is coming very steeply, but as it's coming down, we see large bottoming wick. Large bottoming wick. This wick here, everything's getting absorbed in demand, as well as this candle, and it pushes up again. Buyers step their bids up and look at the reaction. Okay, so that's how I would mark a zone, supply or demand. Okay, a bit off topic, but can you explain how you scale into winning options trades? Are you scaling into the same strike or different strikes? So what I like to do is something called laddering. Okay, so let's look at the cues. Let's just go on this day, for instance, because I only like to ladder on strong trends. I don't like to ladder on chop like this. Okay, on strong trends, you can take advantage of the move simply by, let's say price is right here. Okay, you get an ad near this 20 EMA reject. This is on the 15-minute, 397. So normally the cues have strikes at each dollar price. So if you add, some your puts down here, maybe you take 397s, looking for price to break below the 200 EMA and put yourself in the money. You would be looking at 397, 398, or 397, 396, and possibly 395s. Now, further you go out of the money, there's less delta, but as price approaches these contracts or these strike prices and they become closer to being in the money, the delta increases on those contracts. So what you would do, right, you would buy contracts there, and as it moves down, I'm not necessarily adding to my winner, but I would be adding another strike price. So if I see that the 20 EMA got respected here and sellers are not letting anything close over this 9 EMA, you might want to get an add here rather safely in between the 9 and the 20 EMA here, and take a different strike price. So maybe you took 397s here, maybe you take 396s here. Okay, and then on the next instance here, when it pops up to this 9 EMA and you're looking for it to respect, maybe you take the 395 puts. Okay, that's how I'm trading these and laddering them down. Okay, and that's just collecting delta on the way down, which is increasing the premium that you're being paid. Looking to we're just flipping these premiums. So that's a bit of a that's a bit more of a, I'd say, experience kind of skill or strategy. If you have trouble even trading 1 or 2 contracts at a time, I don't recommend that. I think you should really try to master getting it down the entries and the patience aspect of trading options before laddering or scaling into large contracts. Now, when I am scaling in to a contract, I'll take feeler ads. I normally scale in about a quarter at a time, sometimes a half at a time, if I do have strong confluence under with defined risk. So like something like this, right? It popped up, large upper wick. Your risk would have been here at the top of this wick here, a little area above it. I would have stopped out, but on the very next candle it pops up, gets rejected, validates my entry, and it's a strong move. Okay. Let me look at some notes here. So another problem I keep seeing as well is traders not knowing. So this is a pretty ugly day. I want to go here on the, I'll leave it on the 15th. This was what was it, Friday? Yep, this was Friday. So if you traded the Qs or you traded SPY or anything, the charts were somewhat similar. Okay, they were pretty choppy on the indexes. Now, one tip that I will say is that if the indexes are choppy, look at other holdings within your index. So I like trading the Qs, okay, but I know that some of the stronger holdings in the Qs are Apple and Microsoft, Facebook, and maybe AMD, and a few others, okay? But just off the top, right, those are some of the stronger movers. So if if we go here, if QQQ is choppy like this, look at Apple from Friday, okay? Much different, okay? Look at, let's say, Facebook from Friday, okay? Different story, but this is momentum to the downside. You can still trade this. What are we under? Vwap. Okay, we get a break under Vwap and a base under Vwap, the 9 and the 20 EMA really shoving it down. So you can trade these. Yes, they may seem choppy, but it's a clear trend, okay, compared to the Qs where not so much of a clear trend. Large pop up to the supply, move down to the demand. Yes, inverse head and shoulders, but rather difficult to trade, I would say. Every time it pops up, right, shorts were trying to shove this down. And it was a fight between bears and bulls to push this up towards the end of the day. Troy Trade says, on any trade, when do you execute the trade? Do you wait till the current candle closes in the zone, or do you wait for an additional candle? So I always am watching price action. So yes, this is the 15-minute. Let's look at it on the 5. Okay. Now, when this was coming down, this is kind of scary, right? Big dump candle, okay? But then you see some stuttering on the way down. Large bottoming wicks. You see a big kind of almost bullish engulfing bar. Then you get a bearish engulfing bar. But you see that this bottoming wick there, this shows buying. Okay, now this takes a ton of buying pressure in order to reverse this. Yes, you can take this. But I would have been a little bit cautious on this because price was seemingly, on a smaller time frame coming down kind of rapidly. But you would take a scale and trade here. And if you see this, right, we talked about an inverse head and shoulders. Okay, on this level, right? If it breaks above, you would ideally want the support to hold. Okay, this is a second add. You can scale into that. Okay, also if you're looking at the macro picture here, right? There's your left shoulder or the neckline, your head down here. When it pops up, you're looking for this to be base the support, okay? And then it continues a higher low trend. So I'm not always waiting for a candle to close, but I am being rather patient. I'm not jumping the gun when taking an entry, and I will analyze the price action very closely just to make sure that, hey, when I am taking an entry, I want to be able to know that I'm not taking something that's thin or super weak. Am I planning on trading Apple and various tickers this week? Yes, I plan on trading Apple, AMD, and Facebook if the Qs continue to be a little choppy, right? Just giving myself some other options, as well as being patient, right? So off of open, we took this supply reject up here, but on this supply reject, it popped right back up. It was really choppy. But if you didn't want to go and trade through all this chop, right, sitting through here, you just set alerts, okay? You would have set an alert probably right there, create alert withdrawing, cross below, okay? And when it pops below, you want to watch the reaction. Remember, I talked about when you have a rally or, a push to the downside, you want to watch the reaction to see whether or not it's going to continue from this area, okay? So this popped up. We see a lot of stalling going on. This is most likely going to reverse, okay? It shoves down. We see no candles closing down here below this level. It's stalling. It reverses. Same thing right here, back into supply. There's confluence here, okay? Why did this bounce up? The 200 EMA was there. Okay, now we shove down, all right? Large bearish engulfing candle, right? Even if you had a demand zone, say here, okay? You shouldn't be taking when price action is coming very steeply, very fresh off of this sell-off here. Okay, this was a very strong reaction, and you don't want to just take things blindly. Yes, you could scale into this, but I would scale in rather small, especially on a reaction like this. I don't like to knife catch. So right, you could set an alert and just see, right, hey, price is coming to this demand zone. It's an area of likelihood to bounce and reverse just like it did on supply, and it provides me an area of risk reward, right? So maybe, you know, if it bounces there, right, this is my risk. Okay, but if it popped down a little bit lower, my max risk would be right here under this demand zone. Okay. So yes, so you know, I will be going through, I'll be setting alerts on proper supply and demand zones, as well as, you know, VWAP breaks or high of day, low of day breaks, just so that I don't have to sit here and analyze every single tick that goes on the cues. Because if I sit here and I analyze every single, you know, candle that's presented to me, it's going to leave an impression on my bias towards the trade, right? Even if I am long, if I see a tons of wicks right here, that might scare me and, you know, stop me out when towards the end of the day I can see it closes up much higher. Okay, so also another way to, you know, negate that is use your larger time frame. A lot of traders are stuck on the 1, the 3, the 5, the 10 minute. Really branch out of your comfort zone. Start using the 15, use the 30, use the 1 hour. Okay, if like we saw how choppy that was, look at this 30-minute chart. Okay, how clear is this? Huge amount of buyers coming in here, which leads me to believe that we should move forward, okay? Because no buyers are letting it close under this 200 EMA on the 30-minute chart, okay? The selling pressure was pretty strong here, but what is this? Buyers stepping their bid up, buyers stepping their bid up, they step their bid up again, then you get a strong reaction through the supply here because shorts are being prepared to cover and longs have accumulated so much that they would overtake this supply zone. Yeah, you could say Vwap breaking base, you know, but in both instances, right? So go back to the 5. Okay, like right here, we broke down, and then this is where you were looking to base, and then this is where a lot of people got wicked out, okay? Especially if they were going long, or even if they went short here, right? Because they saw it as a Vwap break, and then it based, nothing really closing strongly here, and then they get ripped up on, okay? So that's why the larger time frame would have probably prevented you from doing that, but this was the chop, okay? Normally when I'm trading options, I don't, especially if I'm day trading or scalping, I do not want any part of this consolidation, right? This sideways moving, large upper wicks, large lower wicks. I don't want to be a part of the decision making. I want to be able to get in on these strong rallies when the decision is being made and has already been made. So I think what we saw here on this day, yep, right there, downtrend break, very strong move. And you don't have to sit through all of this headache here. You're not going to get the best entries or the highest percent, but that's not always the goal. Okay, the goal is always to get a portion or a meat of the move and just take what you can from the market each day. Let me look at some notes here. So like I was saying, right, don't force yourself to trade through the chop, okay? All this time, everyone who focused on trading the cues through this sideways movement, remember we said look at Apple. So wait, let's go back to the cues. Okay, what is this? 11:40 to 3 o'clock. So let's go to 11:40, 11:40. Whoops. Okay, well. And to 3 o'clock. 3 o'clock would be 15. Okay, so we see this. This is a strong, easy trend. Okay, this is all that we want to be able to trade. Why? Because it provides easy entries on the 9 and the 20 EMA, especially on the 5-minute. If the 5-minute looks this clean, I know that the 10-minute is probably just as clean, if not cleaner. Okay, so look at this, 9 EMA tap. This is a clean entry, easy entry. You're not trading through this chop here. 9 EMA tap, right? Another 9 EMA tap, another 9 EMA tap, and once more. Okay, you can scalp all of these. Now remember, the EMAs are not going to tell you where to sell, like where to scale out if you are green on the trade. But the further you are extended from the EMA, it's probably a good idea to start to scale out some, right? Little portions at a time, right? So we see this, right? Strong reaction. You could have gotten onto this trade in multiple instances here, right? Even right there. Okay, VWAP break and base. But if you look at the Qs, right, a lot of people forcing themselves to trade through this. So yeah, there was some good movements, but look at the EMAs. Let me clear this. Look at the EMAs, right? Where's the clean price action like we saw on Apple? Okay. Let's look at, I think, Microsoft as well. Yep. So look at Microsoft. Not as clean as Apple, but look how simple these EMAs are, right? The 9 EMA is not always going to be respected. You have to see and look on multiple time frames to see which one is actually being respected for this price action. Remember, each trading session is unique. There are different participants in the market, and price will move differently each session, but you will find consistencies that you will be able to make money on. So I can kind of see here, right, downtrend break, easy entry there, right on VWAP. You know, you could have marked. A lot of people don't do this. I haven't seen really many people do this, but when I see upward wicks right there and then a bottom wick, okay, I tend to mark these as demand zones. And why might I mark these as demand zones? Would simply be due to the fact that, you know, yeah, this is on the 10-minute, but on a smaller time frame, especially on a rally, this is consolidation. So, you know, I'll mark this wick and the base of this wick, and look where buyer stepped in. Okay, you see where, you know, look, see all the lower wicks here? See all these right here on the 20 EMA as well? A lot of people don't do that. I like to do that. It doesn't work out in every instance, of course, right? The earlier the pullback, the better. But you guys should back test it and, you know, see the kind of results that you get, because yeah, even if you don't mark that, you know, you mark a support down here, but the only problem with support at times is it does give you a crucial level, but you need to be able to find an area where you like to scale in. So even if I had drawn this zone, okay, most likely not taking the top, but I do like this middle area of my demand zones in most cases. That's what a lot of times I'll put orders in the middle of the demand zone just to kind of get a feeler for how this is going to react. Okay, and if I get filled, right, the risk really isn't too bad. From 338.6 all the way down to 338.15, about 45 cents or so. Really not too bad risk, especially on an options contract. All right. But remember, guys, if it's choppy on Spire, choppy on Q, look at your holdings. That's why I keep this summary here, just to go through and flip. It also will show, you know, the majority of the holdings if they're green or red. Fairly simple, and all I did was just create a watch list and look up what were some of the major holdings in the Qs. So let me see. Okay. Oh, thanks, Solo. I also wanted to go over a few. Let me see. Okay, went to that, trading the open. I guess I want to go over trading the open a little bit. I mean, I have gone through it quite a bit, but just kind of touch on patience, because I know that there's a lot of money and there's a lot of potential money to be made, and sometimes you're sitting there like, oh, I just missed that move, right? I just missed that move. You know, now I'm late to the party, and you know, the opportunities are gone, blah blah blah, right? Don't let that get into your head, okay? Because, you know, yes, you know, people who made money on the rip up, okay, they can get caught in problems where, yes, oh, it's ripping up, I have a bullish sentiment, but then not realize that, hey, this was a supply zone that we had marked, and it may take them some time. They may be a little laggard when flipping sentiment for the shove down, because yes, this was a good move. I think it was a 20 or 30% move that morning. But this was an even stronger move. Okay, this was about 100% move on the puts. So, you know, if you are trading every single pivot, you are, I would say you are being greedy, and that in the long run, you know, depending on your style, right? Everyone's so different when it comes to trading, but what I've seen through consistency is just being very patient is what pays the most. So, I mean, you know, oh my God. Okay, so like, right, we had this off of open. You know, you could have marked like this whole red candle here as a demand, and you know, you had like this upper rejection wick right there. Boom. See, you know, the supply was there very clearly here on supply, and right, the demand was there as well. So what I am most likely going to be doing, especially for the Patreon group this week, I'm going to be alerting a lot less on the scalps and more so on the supply and the demand ads, just to prove to you guys that, like, hey, you know, you don't have to trade and scalp every pivot. Yes, you may be missing out on some of the gains that are potential there, and I will still take scalps, but the main alerts I feel like moving forward should be these low risk kind of zone ads, you know, whether it be demand or supply, just to really, you know, be able to get everyone on the right track moving forward, and implementing those low risk kind of entries that really we should all only be trading. Anything in between is really invoked by boredom trades. You know, FOMO doesn't just go up from, you know, people missing entries. It goes from, you know, the euphoria that goes along with trading, right? So, you know, maybe you see a bunch of, you know, green bars like this. How many of you, you know, bought this up, right, went long, and then instantly, you know, got a bearish engulfing candle on you? You know, you're so lost in the euphoria that, you know, you take on a large unnecessary, you know, kind of hit on your account. So, let me see. I'll take a few questions, and then we'll begin to wrap this up here, I believe. When scanning for stocks, how are you identifying the larger moves rather than scalps? My favorite setups. So, you know, really, I've just been trading the Qs, but, you know, if you want to look here, like on Apple, like let's go on the 4-hour. Okay, Apple has been in a pretty strong stair-step pattern, I would say. So this is the 4-hour. So, you know, there was a potential bearish pattern that was performed here, okay? And it's really important to understand that when bearish patterns or bullish patterns are enacted and when they're negated. So, right, we have a neckline here, left shoulder, head. It bounces down, and when it comes up, shorts are anticipating it to be rejected. See this large wick here? Okay, large upper wick here. So they're anticipating it to be rejected, but we see a strong move on our EMAs and the sustaining kind of price action here. So that's negated. So what does that show, right? Especially if we break this resistance right there, that the bullish trend is intact, okay? So when I'm looking at these setups, I'm also looking at for failed setups to the opposite direction. So if the bearish setup fails, it gives more weight and more strength to this bullish setup. Okay. Also, you know, we'll tweak it down here a little bit on the 1 hour. I look at this early stair step patterns. Okay. You've heard this before. Yes, you could have trailed the 9 EMA, whatever. Okay. But if you don't use EMAs, the stair step pattern is just a break in base. It's not gonna break in base on the resistance every single time, but in most cases. So previous resistance turning support, or previous supply turning demand, previous supply turning demand, all getting eaten up here. Okay, previous supply. Once it's broken, it gets based upon, see this large rejection wick, then it comes through solid green basing candle here, right? A break in base reaction, right? Even if we look here, right? Previous supply turns demand, gets bought up after it gaps up, comes back down a little bit above it, and it has a strong continuation. So I'm looking for these kind of strong trends, but remember, the 1 hour is not going to give you everything. You have to be able to go in on your smaller time frame, maybe the 15 or the 30 minute, and get those fresh kind of smaller zones where you're going to find orders that are a little bit not as obvious from the larger time frames. So, you know, then compared to the 1 or the 4 hour. Bromar says, I had a 345% put from the second high day test to the bottom, but didn't sell. Yeah, Bromar. So even if, you know, that's one thing, right? If we're being patient, even if you're scaling or get a good scalp, the name of the game is longevity. We have to be able to build our accounts along the way. And so, you know, let's say we go here on the 5 minute. I think may have been talking about the Qs. Okay. Depending if you have one contract or 20 contracts or 100 contracts, right? You should trade that one contract just as you would trade 100 contracts. Okay, why? Because that's going to instill proper habits and take away from diamond handing these things, right? We're supposed to be building our accounts. We're not supposed to get the very top of the move to the base of the move. Yeah, it may feel good, but we tend to hold on a little bit too long. So I can understand the frustration if you are trading one contract at a time if you're learning. But if you do take it from the top and it shoves down, you need to lock that in, even if it dumps the rest of the day. Because even if you lock that in, that's money that's going to build your account. And if it's going to continue to dump the rest of the day, there's going to be multiple opportunities to enter that trade. Okay, so just keep that in mind. We don't have to have perfect entries and perfect exits. That's going to drive you crazy, and you're not going to be able to grow your account just or as quickly. What time frame do I usually use for day trades and scalps? Day trades and scalps, I typically use the 1, the 3, the 5, and the 10. And larger time frames, right? The macro trades, I like the 15, the 30, the 1 hour. And then for larger zones, I like the 4 hour. Yeah, no problem, Bromore. That's great that you incorporated that into the problems trading channel. So, let's see. Going long on a trade that is below the 9 and the 20 EMA and VWAP, isn't that a scalp day trade multiple resistance points above? Let's see. So, yes, you are right. But remember, these indicators are not everything. Okay. If you're stuck, and just like supply and demand isn't everything, or or VWAP isn't everything, you have to use these all in combination to give yourself a well-rounded thesis and to incorporate multiple points of view of traders. Okay, there's some traders that only use VWAP, traders that only use indicators like the EMAs, and traders that only trade supply and demand, and support and resistance. So yes, we are going long under this, but I'm going long due to good reasoning here, right? I have a demand zone, okay? So with this demand zone, what does that provide me? It provides me that, hey, risk is down there. If it breaks below that point, I'm most likely going to cut, okay? But if it doesn't break below that point, and yes, there are these upper resistance levels here, okay, we can still gauge and be green, okay, because we have the bottom entries with low risk down here, and as it's grinding along, okay, where's the risk at? There's none, because we're moving it up. We're moving our stops up along the way on the most recent pivot points, like so. Okay, that should be, if this breaks, stop out. If this, we're just moving along. Okay. So, I wanted to go through, right? It's been 2 weeks in the Discord now, right? It's been a great transition for a lot of newer members. Okay, I've seen a ton of progress, especially in participation, right? The biggest thing that I really mentioned talking about when joining the Discord was, I wanted to see more newer members being able to participate, right? I've seen a ton of participation, and all that does is, build experience and confidence when placing these trades. So I'm also trying to instill proper patience techniques, okay? Not having to trade every pivot. This is a huge headache and very greedy mindset. And we all know how greed tends to turn out within the markets, okay? Those who are greedy tend to get their accounts blown up or not very profitable, right? They go back and forth, either revenge trading or trying to hit home runs all the time, which ends up chunking their account out. So, this was a great session. We've been 2 weeks into the Discord now. This is something that I do every Sunday. I'm only doing it on this occasion. The next few weeks I'll do the weekly prep within the Discord. But I am going to continue to have these weekly kind of Twitch sessions just to make sure that multiple people can come and be able to be provided and learn some proper techniques that I use each and every single day throughout the market. And just kind of help themselves, push along their trading kind of curve. So going through, I wanted to show some highlights within the Discord, right? A lot of new members within the last few weeks, and a lot of new members being able to make good money. Okay, so we've seen great progress through a lot of these traders. Okay, you see, even if it's a red day, they're typically minimized, right? The biggest thing that I've been teaching is to be able to minimize your losses, and to not be able to just bag hold, right? Hold something all the way down. What happens is people are green on these trades like this, and then they hold all the way down, right? But we know if you're green on a trade, you got to move your stop up, okay? We don't want to take unnecessary losses to drain our account. So, Gramo, new trader, 2%. He's been killing it every morning. Rev, Sooner, obviously doing very well, right? Even this, right? Very minimized on the losses, but I can see here, right? This 64%, it was only on a very deep out of the money, right? Only $7 loss, so I can understand why you hold a lot longer. But on these more closer to being in the money contracts, right? Really tight losses. Okay, this was a 0.2% loss. Minnesota Tom, 60%, 208% from Sooner. Okay, 80% here, right? We're going through the same preparation each morning and being able to, all bank together as a team, right? I go through each morning on the live stream, and I'm up, and I think I start around 8 o'clock in the morning, and I stay on until about 12 or 1 each day. But, just going through, it's great to see the progress and people actually taking on these trades. Whether or not I call them out, right, it's up to them to be able to click the buttons and execute these trades fairly well. And seeing a lot of people, right, I didn't even trade PayPal or Marvel, but Sooner was able to implement a lot of the things that he's learned within the Discord, as well as other resources, and being able to apply that to his own kinds of trades. So, if you were thinking about joining, right, I just uploaded 3 more videos this morning, highlighting my pre-market channel strategy, how to be patient, supply and demand refresher, as well as this huge library of all of these other videos, about an hour or so long, that I go through and have tons of different lessons highlighting key aspects of trading and what you really should be trying to implement into your own kind of skill. So let's see here. I think we're at, what am I at here? This is the last month. I do understand that, we do have Christmas and everything, but this is going to be the last month for the current kind of price set for 2021. I started this group at the end of August. That was the early kind of admission, and we're now over 300 members now. All looking to, strive towards that same goal, which is, minimizing our losses, being patient, and executing when our edge is present. I really want to be able to negate and take away a lot of the boredom trades and the scalping that comes along from trading small caps, right? Trading, getting in and out rather quickly, whereas we can look at the macro picture of the trade and be able to hold on to these winners longer, right? I'd say about 90% of the trading sessions we make at least 100%er, and most of the base hits are about 50% on the trades. So this is the last month for this current price. Of course, anyone who does join will be able to keep that price moving forward, and after that, I believe I'm moving it up to $90. But I mean, out of all of the other rooms, this is the most affordable room for the price. Especially, I do believe that I'm not taking away from anyone else's room, but I put about 70 to 80 hours of work. I go through each day. This morning I was going through chart reviews. These are my responses to a lot of the charts that are posted. And I go through and I review your charts and, kind of challenge yourself to go through. So like I think on some of these, like, what was I saying? Yeah, many times as traders, we focus on where the stock needs to go up in relevance if we are short or long, when in most cases we should be focusing on the strength of the buyers or shorts who are pushing the downtrend along and getting out when they are showing weakness. Great annotation on gauging the trend that was seemingly choppy during the day until all of the higher lows were clear. So I go through and help you with your analyzation and your annotations just to make sure that you're on the right track and you're not looking at things from, let's say, a perspective that would develop bad habits or so. So, I'm very proud of everyone who's been able to participate within the group and trade alongside us each morning. And I've seen great strides in their progress and being able to really cut out a lot of the noisy trades and being able to hone in on what's really profitable. Because at the end of the day, all of these charts in hindsight are very clear, okay? But I do this every day, right? If you're trading a ticker, I want traders to go through an exercise, right? Mark the open range breakout or the high of day and the low of the day. And I want you to be able to mark your buys. And what I've seen is most of the buys you're going to see are traders, buying on spikes like so, or buying puts on big spikes down, right? These are kind of nonsense trades when the most obvious trades are things like this, okay? Near supply zone, near demand zone, points of reversal, right? Breaking bases on EMAs, stuff like that. Whereas, these kind of emotional based trades are always in the middle and in hindsight always the worst entries. Okay, this is exactly what market makers want you to do. They want you to get caught up in these large pushes down and these large push ups, due to the fact that this is going to provoke you to take an entry because you're going to feel like you're missing on the trade or it's going to rip without you. So I hope that this helped you guys. I hope that this especially helped you in your preparation for tomorrow. We have a whole week ahead of us. Last full week before Christmas, I do believe. Yep, last full week before Christmas. Just keep in mind that we do have an OPEC meeting or something discussion with the Fed. Powell also has meetings, I think, this week, as well as quad witching this month. And markets are closed on the 24th, so next Friday. I think the 23rd they're open. I'm not exactly sure, but it's just some things to keep in mind. But once again, I hope that this provided you with some knowledge that you're going to be able to apply into your trading session this week. And really, the main goal of this is to provide cautionary measures to really minimize and negate a lot of the losses that, in hindsight, were very obvious and very preventable. So, once again, thank you to everyone who tuned in tonight. It was a pleasure being able to, display a lot of my strategies and explanations. And I look forward to doing more of these. So you guys enjoy the rest of your evening. And, if you do have any questions about the Patreon, I will post a link in the chat. But you can also DM me on Twitter or on Discord. Either one works. So you guys enjoy the rest of your evening, and I'll catch you all tomorrow.